You're watching Expert Insights.
Hello, this is Michael Simpson. It is Thursday, September 19th, 2024. I am the manager of the NCM Dividend Champions Fund. Today, we're going to discuss Dividend Champions, what makes the Dividend Champion, why they are coming into more interest in the market, and also the impact of the US election on Canada and on the NCM Dividend Champions Fund. So we think of a Dividend Champion as a very strong company. It generates strong cash flows, it pays a dividend, but most importantly, it has the ability to raise their dividend each year. Also, ideally, this company is in a strong position in their industry. And secondly, there's not too many companies in that industry. So you have a strong balance sheet, you have a dominant position, strong margins, strong management team. In essence, when you wrap all that up, I know there's many factors I discussed there. That is what makes the Dividend Champion. But the cherry on top of the ice cream is the ability to grow your dividends each year. And although some people look to the recent past where we've had higher inflation, when inflation is running back at its main level of 2 to 3%, and you're getting dividend increases of 4 and 5% each year from some companies, not all, that is really fantastic. So Dividend Champions' strength and the ability to raise their dividend each year. Over the last couple of years, we've seen tremendous performance from growth stocks. Yes, we've all heard about something called artificial intelligence. And in order to do these complex applications, you need chips. The major dominant player, although not only player, is NVIDIA. They produce chips. Their sales are growing at a fantastic rate. But as valuations have risen, as there's been concerns about slower growth, as the valuations for traditional dividend payers has been left behind, people are taking a closer second look at the traditional dividend-paying stocks. So as a small group of technology stocks have really increased in value, investors are now looking to the overall broader market, and a lot of these stocks were ignored or neglected, and then what that means in the market is their valuation either at best stays stagnant or goes down as some investors sell their what they term slow growth or boring stocks in exchange for some of the faster growing stocks. So dividends are making a resurgence, they're making a renaissance, and they're a good complement, not only a complement, they are essential for everyone's portfolios because you need the income and you need the rising income. So after value has run its course, especially when you look at the valuation, dividend stocks are making a resurgence. In 1854, there was the first lumber dispute, lumber dispute between Canada and the US. Back in 1854, we weren't trading cars or auto parts, it was lumber. So in the course, going all the way up to 2024, there have been about 7 or 8 different lumber disputes. Also going back into the past, in 1965, a US President, Lyndon Johnson, as a favor to Canada, implemented the Auto Pact. That led to the free movement of auto parts and completed autos and trucks between Canada and the US. That was greatly beneficial towards the Canadian economy. Again, flipping to the present, a candidate, Donald Trump, wants to put a tariff on all nations, every nation of at least 10%. So that would impact Canada indirectly. But what I can tell you is that every politician from every party makes promises during the election campaign that they don't keep. Trump has even admitted that this is a negotiating or bargaining tactic. So he wants other countries to come online. So, Canada is well poised. Our largest trading partner after the US election will still continue to be the US. We are we are making a transition to a greener economy. We still have resources that we can extract. We can still extract resources in a conservative, sustainable way that pays attention to the environment. So regardless of who wins the election in the US, Canada will be able to sell their goods to the US. I think there's a lot of bluster and there's a lot of talk. Investors need to ignore this and actually wait for the outcome. So I'm not worried about the US election. I'm worried that Canadian firms keep on competing hard, that they do the right things, they reinvest in their property, equipment, and people. But overall, one shouldn't worry about the election because Canada has prospered under both Democrat and Republican presidents. And I think the trade relationships are so strong, they go beyond any personalities and definitely any party lines. Thank you for watching. If you have any questions, please contact sales@ncminvestments.com.
These days, it seems like everything's an index. Passive ETFs or active funds that just hug a benchmark. But what if you want to invest in extraordinary companies? Take advantage of real expertise. Do something to exceed the mere average. Well then, there's no excuse. It's time for a closer look at NCM Investments.